Good morning, good afternoon, good evening from whichever part of the world you joined us. Thank you for joining. My name is Nikhil Gokhale. I'm the head of research at IBS Intelligence. Today we are going to have a very interesting webinar on the topic of open banking and the future of open banking, which is of course open finance and FIDA. FIDA is a new regulation which is going to come into effect very soon in EU and also equivalent in the UK. Expect similar regulations all across the world. So how should financial institutions prepare for it? What are the things that they should know about it? Of course, what are the benefits for different stakeholders within the whole value chain? And to discuss all of that, we have a very interesting set of panelists today. Please join me in welcoming Anne-Sophie Morwan. She is the Chief Commercial Officer at Lux Hub. Lux Hub is a consulting firm that specializes in helping banks with their open finance journey. More importantly, I think why she was one of the people that I'm very excited to talk today is she is the vice chair on the working group, which is actually developing and drafting the regulation around open finance at the European Union. Welcome, Anne-Sophie. Next, we have Dr. Ritesh Jain. He is the founder and board member of Infinite. Infinite is a credit card experience company, and it's a company that was born thanks to the open banking phenomenon. In his previous avatar, he was with Visa. He was a digital portfolio manager before he turned into a serial entrepreneur, and he has multiple fintechs that he's been a part of, advises, and of course, he's also founded multiple fintechs. Welcome, Ritesh.
Thank you, Nikhil. Pleasure to be here.
Last but not the least, Alan Goodrich. He is the sales director at ERI. ERI is a core banking and wealth management software provider. He comes with more than 30 years of experience in the technology space. He has pretty much seen technology grow from infancy to what it is right now. So pretty much, the topic is, of course, open banking, FIDA, and open finance today. But pretty much you can ask any question to Alan within the tech space, and he should be able to answer that. Welcome all.
Thank you.
And before I get started with the panel questions and asking you, each one of you, some very interesting, difficult questions, I want to turn the spotlight to you, Alan. If you could just spend a few minutes just setting the context, helping us, look at where we are, why we are, and how we are when it comes to open finance, it would be great.
Great, thanks, Nikhil.
Over to you, Alan.
So, thank you. Let me quickly share my screen. So, I have a few slides.
You can see it. If you could go full screen, Alan, it would be good.
Yeah.
Thank you.
Is that better?
Perfect.
So yeah, I think just to kick things off, I have a few slides to provide a bit of a background and overview of FIDA. I think it's important because about 9 months ago, Deloitte did a survey in Luxembourg, which showed that there's really quite limited readiness and even understanding of what FIDA entails. And I mean, likewise, in other parts of Europe, I was at a conference speaking about FIDA back in April and for the Central and Eastern Europe, and only 2 audience members stuck up their hand to say that they knew what FIDA was about. So we thought we'd start with an overview. And as you mentioned, we're super lucky to have Anne-Sophie with us today, as she's right at the forefront of the process and can correct or update anything that's maybe not quite right in my slides, because it is a moving target, right? It's something that is still in the process of being fine-tuned. So we're going to look at the context, the timeline, the scope, and the obligations of participants. So, I mean, FIDA is an EU planned regulation. It's driven by an EU proposal for regulating financial data access and, in brackets, building open finance. And it forms part of a bigger EU strategy for data, which comprises the Data Act, the Digital Markets Act, Digital Services Act, Data Governance Act, and then you have the common data spaces. And within the common data spaces, that's broken down into 5 areas: health data, industrial data, energy data, other data, and of course, financial data space. And then within that, you have the digital finance strategy. So you have European single access points, supervisory data strategy, and now the financial data access, so FIDA itself. And really the general objective of this is to improve economic outcomes for customers and to promote digital transformation and speed up the adoption of data-driven business models. So the timeline is quite interesting as well. The current legislative package on the framework was actually published about a year ago, just over a year ago, in June 2023, but it had been coming for a while. It all started with the digital finance package in 2020. In 2021, there was the establishment of an expert group on the European financial data space. And then in May 2022, there were 2 consultations launched. One around a public consultation on the review of the revised Payment Services Directive, PSD2, and also a targeted consultation on open finance framework and data access in the financial sector. And then in September 22, it was stated again in the Union letter of intent that this was really a key initiative for 2023. And then, as I said, in 2023, the actual legislative package was first exposed to the market. The intention, as I understand it, and maybe Sophie and Sophie will be able to update us on this, is that the plan is that it should be adopted towards the end of 2024, if not then early 2025, which would probably mean that it would come into force in the second half of 2026, given the timeframes it takes for countries to actually put into force something that has been adopted. So it's not far away when you consider actually some of the changes that are required to our IT infrastructure in financial services. It's really not long, 2 years. So I just mentioned briefly there about PSD2, PSD3. This FIDA is really something that is outside that scope. PSD2 and the coming PSD3 focus very much around the payments world. FIDA is pretty much everything outside that. Because outside that, up until now, there has been no structural way of accessing, and I know that the word is not preferred now anymore by Anne-Sophie's team, but to share the data amongst the various financial services participants. And I mean, there are specific objectives here. Really, the main one, I think, is to enhance customer trust. So giving them meaningful control over their data and the access to their data, and enable effective access for third-party data users. So obliging the data holders to enable access to the customer data where the customer gives permission. And as I think we'll see as we go into the panel discussion, we'll drill down into that a bit more. Promoting standardization of customer data and the interfaces, and promoting the implementation of high quality interfaces for the customer data access. Now, what is really interesting is the scope. As I said, it's the scope is outside the payments world, and it really covers pretty much everything else. So, on the one side, we have the customer data access, the APIs that are going to be needed, the permission dashboards that are going to be needed. And one of the key things in there is this idea that it has to be in real time. And it covers all of the banking products and services, so savings accounts, loans and mortgages, creditworthiness of firms, not individuals, investments, so financial instruments, all your holdings in your funds, etc., real estate, suitability and appropriateness, so your MiFID data, insurance side, you have the non-life insurance products and insurance product information. So excluded is anything to do with health and things like that. And also you have the pension side of things and other retirement savings. So there's a great deal of information about financial services products that's going to have to be made available in real time to participants in the market where the customer has given their permission for that access to be given. And it's really a diverse range of data, as you can imagine from that. So it's all the mortgage credits, loans, accounts. It encompasses all of the balances, conditions, transactions, data concerning the investments in financial instruments, insurance-based investment products, crypto assets, real estate, and associated financial assets, and even the economic benefits derived from them. So there's a potentially a huge amount of data that needs to be presented to the outside world, and the access be given to that data in real time. In terms of the institutions that are covered, it's pretty much anyone who's acting or participants in the financial services world. So there's credit institutions, i.e. banks, payment institutions, EMIs, MiFID investment firms, the crypto asset world, alternative investment fund managers, UCITS managers, insurance intermediaries, retirement, occupational retirement provision, crowdfunding, pan-European personal pension products. And actually, there's even a new type of institution that will be covered by this as well, which is the financial information services providers. So organizations that are set up specifically in order to enable access to this kind of information. There are some pretty strict obligations that are in the text. As I said, it's being fine-tuned, but I would definitely recommend our audience to go out and read it as it stands today, because there is a lot to absorb. There are obligations for data holders to make the data available to customers and to data users when requested by the customer. And of course, there are exceptions when there's the trade secrets or intellectual property at stake. They have to make the data available in a standardized way without undue delay. In other words, continuously and in real time. They have to communicate it securely. And they have to provide this permission dashboard as well, which is going to be pretty complicated because it's not just about saying yes or no, because behind it, you also have to talk about the purpose of why they've given that permission as well. And then the data users also have obligations, authorizations and organizational requirements, only access the data for the purpose for which they were granted permission, prevent the transfer of the data to when it's unlawful, ensure the security, and make sure the data is accessed only by the entity or the group that acts for the data user. So just because they've given permission to one part of the institution doesn't mean the whole institution has access to it. And then, the safeguards for the customer control. The customer is the one who will decide who has data access to their personal and non-personal data. The obligation on the data holders, they must, as I said, give access to these permission dashboards, which are not going to be simple. And the obligation is on the data users to respect the data use and perimeter of that usage and ensure responsible handling of that data. And of course, all of the financial institutions and even the newly authorized FISPs will all be subject to DORA as well, which is important to note. So that is a very quick background. And now, I guess, with the panel, we can delve into some more specific questions, Nikhil. And I will stop sharing.
Perfect. Alan, thanks for setting this up. Very interesting. I picked up a few points that you spoke about. One, of course, is when you spoke about that it's going to be beyond just payments into multiple areas. And I think we will uncover some of these points that you brought about. You spoke about data being at the center of everything. You spoke about how the customer still is the owner of the data and the one who decides who to give access to and who not to. We also touched upon something that when we were having our alignment call with Anne-Sophie and Ritesh, where Anne-Sophie was quick to point out that it's not about sharing of data, but all about data access. So we'll try and unpack all of that. We have about 40 minutes, so we can dive into it. Before I actually dive into it, let me have a quick poll of people who are on the webinar. Let's do a quick poll. Okay, I hope everyone can see the first poll question. How do you perceive the transition from open banking to open finance and now towards open economy in the future? How do you think it will influence your financial dealings? First option, significantly enhance your financial options, the number of options that you have. You would think it's moderately going to impact, but not have a very big impact. Little or no impact on your personal financial dealings. And the fourth option is unsure. You actually don't know about how it's going to impact. So still trying to figure that one out. Okay, currently significantly enhance the two. I'm going to end the poll and then talk about the results, because otherwise it's going to influence what people are going to choose. I'm going to end it in the next 10 seconds. I see that. All right. Very interesting. So I can clearly see that I'm going to share the results. Interestingly, there are people who believe it's going to significantly enhance financial options, and then there are people who have absolutely no idea about the implication. So I think we have a great set of audience here, because there are, on one side, people have a very good understanding of what open finance is and what FIDA is. And it seems that the other side, there are people who have absolutely no idea. So I think we have dear panelists, we have a very tough audience in hand, where we have to cater to both sides of the world. So Anne-Sophie, let me jump in and ask you a question, perhaps more towards the people who don't understand FIDA enough. What started as open banking maybe 5-6 years ago, it's slowly transforming into open finance. And I think overall, there has a potential for it to transform into open economy, which will have data as the base. And FIDA is the catalyst for doing all this, or for getting it all done. What would your thoughts be about this progression?
Mm-hmm. So I will speak also to the people who answered that they were unsure about the implications. Maybe go back in history. What we call open banking in Europe today is PSD2 mainly. So the idea that the banks and some e-money institutions have to provide application programming interfaces so that data can be retrieved, but payment accounts data only can be retrieved, or payment initiation can be done. So the scope is quite limited. And we mainly speaking, when we speak about open banking in Europe, this is basically what we are thinking about. But what open banking concretely is can be far more than that. And actually, several providers already exist in the market. They are using screen scraping, and they provide kind of open banking, but not through APIs. Or they complement their offer. Payment account is through APIs. Another kind of data is through screen scraping. What the European Commission wanted to do and wants to do, not only in the financial sector, and Alan explained it really well, is to have a whole strategy around data. Not only financial data, about energy data, about health data. This is far broader. In February 2020, they really explained what is the European data strategy. They've been putting in place common data spaces, and financial industry is one of them. This is their idea is it's very important to unlock the data, because if you want to develop innovative services, if you want that people have really access over the data, that they can decide to whom they provide access to the data, the European Commission considers that it is necessary that a framework is put in place. Because what we see is the reason why we have screen scraping today done by a lot of stakeholders, it is that there is no standardized access to the data, and there are not really partnerships between those who are the data holders and those who want to access the data that we can qualify as in FIDA as data users. And the idea is really to open up this data, always based on the permission of the customer. This is one key point. There will always be the permission of the customer, and this is the one that is deciding whether or not to provide access to its data. So that's a bit the move, the idea. We have today locked data. The only way to access this data today is for payment accounts through PSD2, but for other data, it's mainly through screen scraping, which is not entirely secured, or that can lead to some issues with the terms and conditions of the bank, for instance. And that's the reason why the European Commission is pushing to have a framework in the financial sector, that is the topic of the day, in the financial sector, to open up that kind of data and to have more innovation in the sector and put the customer at the center. So that's really the idea. And well, my thoughts about it, it is interesting, but it's going to be, of course, a challenge for financial institutions to implement. But there are also some opportunities that we'll discuss a bit more in detail.
We have Ritesh. He's one of those who's actually using the regulation. Maybe using is the wrong word, but he's using the regulation for the benefit of customers. While doing that is also helping financial institutions. So Ritesh, you are in that space where you're helping customers, you're helping financial institutions to get more options, get better with their finances. Help us understand how customers are benefiting from what you're doing.
Thank you, Nikhil. Alan and Anne has done a fabulous job by explaining in terms of the FIDA, right? And open banking as well. So for my experience in open banking, I was sitting in the first meeting of the CMA Competitive Market Authority in UK when the open banking whole concept started, right? So the PSD2, I come from the payments. I led the payments innovation at Visa in the past. So data and the payments have been part of my life, most of my life. If I go back, my hair used to be gray, not gray, black then, right? So what happened, PSD2 is mainly focused around the payments space. What Anne has mentioned rightly is around the screen scraping as well as APIs, which can be accessed by the third-party providers so that customer can provide their consent to use their data. Let me directly jump to the example that will help audience as well. So if you are in India, you know that you have got cred or a new application like check, where you have got if you hold the multiple credit cards or if you want to make a credit card payment, outstanding bill payment, you can do through these apps. Now, the major difference, why I have picked up an example of India, let me give you an example of UK for that matter. In UK, we have got banking applications, and you can connect. If you've got 5 different accounts or 5 different credit cards, you can connect all of those credit cards on a single screen. And that happens through the open banking. In India, on the other hand, we have got the account aggregation, which is Sahmati, one as an organization, which is an account aggregator. But in India, we don't have an open banking platforms as such. So the challenge is, like, if somebody would like to start a business today or start a fintech which is focused on the credit card consumers, they don't have an aggregated bank's API at a single place. However, in the UK, because of the open banking and because of the payment service directive, we have got multiple platforms. You name it, TrueLayer, you have got Think, you have got Plate, you have got multiple others, right? So these platforms, they are doing the legwork for the fintechs or the third-party providers. They are aggregating all the application program interface APIs of the different entities and from the different banks and the financial institution, and they can expose as a single API, so that as a fintech founder, if I would like to go and build something for the consumers, I don't have to go and run around and do the standardization and build the APIs or the connectors, right? I can directly implement these platforms, right? So that is the major difference. Now, when it comes down to the open banking, I'm saying this for out loud for last 7-8 years now. Open banking is completely washing up your dirty laundry in an open space, right? Now, because of the standardization of the API, it is much better, but it's still there are struggles. So if I talk about the open banking in the early days, it wasn't standardized. So there was a significant amount of challenges for the consumers. When I say consumers over here, I'm referring to the consumers of those API, which are basically the fintech providers or the service providers. Significant benefit to the consumers, but at the same time, it has opened up a Pandora box. Earlier, banks used to think that they own the customer data, but which is actually owned by customer. But until recent time, bank used to think they own the customer data. Now, the customer want access to their data, and they want to be in control of their data, that they should be in a position to give consent to access their data by any third party. That's what open banking did, but only for the payment services. Now, what we are talking about over here is FIDA, which is phenomenal because open banking is the stepping stone for the open finance. So when I said you can have multiple accounts, multiple credit card access on your single application, but that is more payments and banking related. What we are talking about over here is the aggregation of anything and everything that you have got. So whether your insurances, whether your wealth, whether your assets, variety of assets, whether they are physical, digital assets, digitized, tokenized, whatever assets, combining that together, and it's basically to unlock the value proposition for the customer. And this regulation helps from multiple perspectives. It has got its own challenges. I'm referring to FIDA. FIDA has got its own challenges over the period of time that I could foresee when it comes down to the implementation, but it's going to be phenomenal if we could achieve in the timeline. But timeline could be subjective, but let's be realistic. It is phenomenal because if I look holistically, the global markets today, UK European market is much advanced in terms of the regulation when it comes down to the data, because we had data privacy and the security regulation far-fetched and long before anybody. I've been advising on open banking in the global landscape, so I can say that proudly that UK and European region is much more stronger in terms of the data regulation. So let it be PSD2 or let it be GDPR or any other regulation. In the US, it's highly fragmented. In India, it's still building up. So that's a challenge. But whenever you go later to the party, you're well prepared as well. So
yeah, I agree. I think, we're also hearing a lot of this when it comes to the Middle East. Open banking is becoming a bigger and bigger focus area. across multiple countries within the Middle East. I think that's going to be a big game changer. Lessons learned from UK and EU, as you're rightly saying, will help the implementation of open banking in the other geographies, which is good in a way for the other geographies. Maybe not as good for the first mover advantage that you get. That's the flip side of being the first mover, right? And then let me bring you in. We touched upon a few things here, right? One of them was that it's the financial institutions are not prepared when it comes to being ready for open finance and for the FIDA regulation. Help us understand that a little bit better in terms of what is required to be ready, and why do you believe that financial institutions are not ready? That's one part of the question. And the other part is, do you think that overall, given the financial institutions, do you think who would be the winners and who would be the losers, if I were to use that word, as they prepare their journey in open banking and FIDA?
Yeah, these days there are no losers, right? Everyone gets a medal at the end. But so yeah, it's interesting because I mean, as you mentioned right at the beginning, I've worked in financial services for a long time, longer than I probably cared to mention, but it's always been a sector that's kind of frustrating, because if you look at other industries, the financial services sector is quite conservative, and it's always been quite slow in its adoption of new technology and innovation. Maybe because it's very risk adverse as an industry, it has to be. But really, if and I'm going to talk about maybe two the customer segments, either you or I as consumers of financial services, but also we can talk about the corporate side as well. Right, for you and I, and for most people, we've really got used to the e-commerce world, the Amazon experience, where you can be onboarded very quickly, very seamlessly, relatively painlessly, and you start to connect different things to your world. And when you go on Amazon, already it's starting to build data about you. It proposes certain products based on your history, etc., that you might want to buy based on what you've already bought. You choose what you want to buy. You make the payment really seamlessly, so it's already connecting, to the payments world. And then once you've made your order, you also have complete transparency over where that order is. Has it left the depot? You have tracking information. It's plugging into the tracking platforms for parcels, etc. Everything is being pulled together. And as a consumer of e-commerce, you ask yourself, well, why can't a bank do the same thing? Why can't I have transparency over the whole process and where things are? Okay, now with an instant payment, it should be happening instantly. But particularly when you go into the other side of things that FIDA now covers, like your securities holdings, and there's a big push also in Europe for everyone to get invested. Interest rates are pretty low. They want people to start investing in capital markets. So this information, people are going to want to know when they order, some units in a fund, where is it? Are they now, the payment's been made? You see that instantly, but is the fund in my portfolio? Well, if it's not yet, when is it going to be settled? When is it going to be in my portfolio? What's the latest valuation of it? And that side of custodian banking has traditionally been quite delayed process based. It's not been real time, probably because in my lifetime I've seen settlement cycles go from 30 days all the way down to T+2 now in Europe, T+1 in America. With crypto, etc., and tokenization is going to go. It's going to be atomic. It's going to be real time. But many of the legacy systems that banks are using for that side of their business are still delayed process based. So it's going to be very hard for them to deliver this information in real time to APIs. In my opinion, APIs are just the tip of the iceberg. Below it, you have to get the data there to the API in real time. And this is going to be a big challenge. And yeah, the financial services world has to catch up with the e-commerce world. And likewise, you know, for companies, you know, there's a whole financial services, a financial value chain to things like trade finance. And I can see that FIDA can also bring a lot of benefits to the trade finance world, where you need to be able to see the whole value chain in order to be able to, you know, issue an LC or whatever. You need to have instant access to the whole value chain of finance that currently may not be available because we were only talking about payments accounts in the past. So yeah, lots of evolution to happen. And I think it's a shame in a way that, you know, we have to rely on the Commission to come up with a regulation to force financial services to evolve, but it needs to catch up with e-commerce.
I will direct this question to you, Anne-Sophie. Do you believe that regulators have found it hard for financial services to build things on their own? Almost like, you know, you being the school principal and going to force financial institutions to start giving access to data.
That's a big question that I often ask to when I present FIDA or open banking, open finance in general. Well, should it be forced or should it be voluntary? And in some jurisdictions, we often take the US actually as a jurisdiction where open finance has been, or open banking has been started to exist. And there have been partnerships actually set between different stakeholders as an example of what is successful. But in the end, actually, the US is currently amending the Dodd-Frank Act in order to set up a rule to open up the data. So even in countries where it was more voluntary open banking or open finance, it is slowly changing. What we see from the last years is some financial institutions in Europe decided to really take open banking as an opportunity to publish more APIs, to put more API products on the market, and to really monetize the data that they have, based always on the permission. And I saw the question in the Q&A, I can answer later, but that there have been some financial institutions that really took the opportunity of opening up their payment accounts, and they thought, okay, I will open more. I will try to leverage this. Because you asked to Alan what they have to put in place, these financial institutions. One of the things is to have a platform, an API platform, for instance. And some financial institutions decided, okay, I will set up a platform and I will leverage it to publish more APIs, to monetize more data. However, if you look at the number of banks in Europe, this is really a very big minority. And that's the reason why the European Commission has decided to move forward with that. It's true that we regulate really a lot in the European Union. However, if I look at other jurisdictions around the world, if you take, I don't know, in Australia, if you take Brazil, there are open banking frameworks that are, or open finance, even Brazil, that are coming up. And it seems that a push from the regulator is necessary. However, what we see with FIDA is that there is an importance of the industry, that they're, but the difference between this text maybe and others is really this role of the industry in setting up the financial data access scheme. So we will see.
You use the word opportunity. So instinctively my mind went, carrot and stick. The opportunity sounds like a carrot. So if financial institutions create APIs and offer them, that's the opportunity to monetize it. So if you could tell us, when you say monetize, What kind of monetization are we talking about? Is this going to be a significant opportunity, or is it going to be you believe it will be a rounding of error? And on the stick side, okay, what are the implications if you don't comply? What happens if what kind of implications does that have?
I don't like to speak about sanctions. Let's start by the positive part. Until now, those who have
So
decided.
since I called you the school principal, we'll say punishment.
Yeah. So if we start by the monetization side, until now we have what we call a monetization for data other than payment accounts data, because in print, so through PSD2, the banks, they had to comply and to provide access for free. The access is provided for free. However, let's say that a bank decides today, before FIDA, to give access to securities account data, for instance, they can decide to put a price on it. And then it's going to be the market who decides how much would I want to pay to access this securities account data. There is no specific regulation about it today. Tomorrow, in the context of FIDA, depending on whether it stays like that, but in principle, the financial data access schemes that's going to be set up, they will define the maximum compensation that the data holders can request. So it's going to be more the idea of a compensation rather than a monetization. And how should it be calculated? Could there be a little margin, etc., etc.? There are still a lot of discussions about it. So I cannot give you like a complete answer. Let's say that the answer is PSD2 was providing payment account data for free. Under FIDA, in principle, your data holder can request a compensation for it. How it will be calculated, I don't know yet, but at least there is this.
Is this something that is currently being discussed in the meetings that you attend? Oh, wonderful. So
not in the meetings that I attend, but at the council level. At the council level, it is one of the things that is discussed indeed. Yeah.
Super. So the answer is stay tuned. And you've not answered the second part of my question, which is the punishment.
There are sanctions like in every single regulation, but let's see what's going to be. So one important thing, this is going to be in principle directly applicable. So there will not be much decided locally. It will be in principle from a European level directly applicable. So the sanction is going to be the same for everyone, which was not the case with PSD2, where you had to implement it locally. So the sanction regime is going to be the same for everyone in principle.
Which is very interesting. It means that the urgency of becoming FIDA ready is definitely going to be there. Ritesh, I'm going to shift gears a little bit and ask you a different question. Because you are you have your offerings in multiple geographies. Do you see that if there are different regulations or the evolution of open finance in different countries is going to be different? How will that have an impact? So if US has does not have the open finance regulation, but just the open banking regulation. India, for example, does not have open banking, but it has something else. It has open banking in a different way. Middle East is still, figuring out. Within Middle East, your UAE, Saudi, which have different. There are different maturity levels. Now, as a company which has global offerings, what kind of impact will this have when it comes to having financial products which are across different geographies? Do you see any impact there?
I definitely see a greater impact, and thanks, as you mentioned about the SAMA, the Saudi Monetary Authority, or UAE for that matter, or even Australia. I'll go back to Australia straight away after open banking. The Australia, when the first statement came from Australia, that was completely focused on data. That was focused on open finance, and that was the first step in the open finance globally in terms of the regulation that I've seen. Right. So Let's go to Nigeria for that matter. Open banking over there. I've been instrumental in implementing it in Nigeria and the different geographies as well, like Saudi. I've been advising. Now, as you said, like, what is the challenge going to be? Yes, the regulations are not going to be consistent across the globe, as you know, because of the geopolitical nature, right?
Yes.
And I'll say a statement over here, which is relevant and not so relevant, but too relevant for the greater schema. Payment is a political business. When I say the payment, it is not only the payment, even the financial institutions or financial services, to an extent, is a political business, right? Monetary authorities, they have a greater control on the monetary system, financial institutions in a country. Regulations are not going to be the same. They're not going to have, like, let me pick up open banking for Europe and implement it over in a different region, because they have got their own set of challenges. Now, what we really need over here is consortiums, right? Like BIS at the moment, Bank of International Settlement, working for different projects, combining various central banks and running the multiple projects, whether it's related to the CBDCs, cross-border payments, or anything else. Similarly, what we need is the initiative in open finance from a global body to coordinate the regulations around, because otherwise what we are going to see is a mess over the period of time. A mess might not be a right word, but I can't find any other better word than this. Alan, can you think of something in the meantime? So we are going to be in a slightly messy situation for global organizations, where they will be dealing with the local regulations while they will be catering to global customers. We can look into our own blinders over here and look into from the each geography perspective, or if we can talk about like HSBC, World's Local Bank, uh, which I represented at one point of time as well. So yes, they are dealing with the local regulators in the different geographies, but think about, like, borders are opening today, right? We are serving to the global customers. So yes, we need a standardization in open finance, whether it comes down to your API standards, whether that will be difficult, though, significantly difficult, or we come down to the data security, or we come down to the data porting. So over the period of time, we will see a major opportunities for the service providers in terms of the porting of the regulations or porting of the data. That's why I'm looking into this whole gamut in next few years, once the open finance is evolving. Because open finance in itself, in any geography for that matter, and I'm sure Alan and Anne would agree to this, that it's a phenomenal task, because you're talking about banks, you're talking about the transaction sharing, you're talking about the information sharing. I wouldn't say the data sharing, you're talking about the information sharing by the customer consent. In the payment itself, it was a challenge at one point of time. Now we are talking about the different institutions. So the custodians, data security, and let's not forget about, everybody is going through the transformation. So the digital surface has gone up multifold, right? So we already have got a significant challenge related to the security. And so who will take the accountability, so it's a greater set of regulation and a lot more responsibility, and in terms of when the data is at rest or in transition from one entity to another entity and something goes belly up, who takes the accountability, who's the custodian at that point of time, what happens, right? And who will be standing?
So Ritesh, I think we should, we should take credit if and when a global body for open finance is set up. We should take credit for having that idea on this particular webinar. Look, there's a question, a very interesting question in the Q&A, and I'm going to let any one of you answer. It's a very, very question that is going to get each one of you on the spotlight, right? It says, I'm relatively new to the world of open finance. Provide me one or two use cases which is clearly telling me what is possible or what is not possible today, which is going to become possible thanks to FIDA. Okay, it's an open question. I let any one of you take that, or all of you take that. But what I'm really looking for over here is let's get down and make it come alive with the actual use case, if there is any that you can think of. What can't be done, what couldn't be done before, and what can be done thanks to FIDA.
So if I may take this one, let me give you an example about the biggest challenge globally today is the MSME, right? We talk about the retail customers, we talk about the sizable customers, institutions, corporates, and when it comes down to the MSME, that is a common challenge across the globe because the MSME runs your economy. We can't forget that. And the biggest challenge for the MSME is because is access to finance. I'll not talk about the financial inclusion because I do talk about that enough as a member advisor on G20 GPA5, which is the Global Partnership for Financial Inclusion. We say that people need access to accounts, people need access to services. Yes, they do, but that doesn't solve the purpose. What solves the purpose is that they need access to money, right? And the biggest challenge of the MSME or the small customers is how they get access to money. That's where the open finance will play a significant role. Let me give you an example. Simply pick up from any geography for that matter, like QuickBooks sort of applications, or like likes of Tally in India, or any other applications which is used by the small businesses, right? They can directly open up their data for the alternative credit scoring, and they can get access to the better financial product. We can argue yet there are some sort of product available today, but let me guarantee you that, and I say guarantee in double quotes, that they are not effective and efficient as of today, until unless we open the financial data, because invoice data could be very different. We have seen the cases or the frauds related to the under invoicing, over invoicing, and so on and so forth. That is still not relevant. So what we need is opening up the financial data of these SMEs and providing them the access to finance, which is happening through the POS now from the point of sale. Because if you look into payments companies today, their focus is, because in payments, there's not much money. Depends on the geographies. If I specifically talk about India, there isn't enough money in the payments business. So the payment providers are commoditizing merchants. That is a typical example of open finance. And I'm talking about to a greater extent. Let's move above the POS, the point of sale. Let's go into the MSME sector. That would be the beautiful example of the open finance and supporting the ecosystem as well.
Okay, so just so that I paraphrase it for the audience. So essentially, what you're saying, Ritesh, is the small companies, the micro and small companies, they don't have access to credit as much, and thanks to all the information when it comes to invoices, when it comes to payments that they do, all the financial dealings, and essentially they are able to share this information with the financial institutions thanks to open banking. So while it may not, most of us may see this as a normal financial activity that a MSME can do. I think one of the biggest difference is now that instead of the MSME actually furnishing this data to the financial institution, so saying these are my financial statements for the year so and so, instead of the MSME actually giving this information, that information is coming directly from the source, which means it's verified, it is guaranteed to be authentic, and the risk of fraud goes down, which is why the financial institutions can then lend and provide the credit to the companies in a much faster and much more, I would say, better terms than otherwise. Is it fair to say, Ritesh?
Thank you, Nikhil. That's absolutely what I meant to say. And thank you for articulating it so well.
Oh, perfect. So I thank God I understood it right. Look, I think we're coming close to the time that we have. I do have one quick question for all of you, right? And again, it's a very open-ended question. The only catch is that it's going to be a common question for the three of you. but you can't repeat what the other person has said. So the person who goes first gets a opportunity to say what he or she wants, right? So what's that one thing that we should watch out for in the next 12 to 18 months when it comes to open finance?
You're going to start with me.
Super, there you go.
Okay, so, well, I think, talking to banks recently about FIDA and the challenges, there's almost two camps. There's banks that are struggling with old spaghetti, and there's banks that are struggling with new spaghetti, where they basically went the route of lifting functionality into a layer of fintech solutions out of their core system. So they just created a new spaghetti to replace the old spaghetti. The problem is they both got spaghetti still. And the data consistency synchronization required in order to feed the new APIs, and I'm sure the others will talk about that side of things, the opportunities there for fintechs, etc. But for me, the fundamental challenge is in their core systems. And so I would say the one thing to look out for over the next 12 to 18 months is a wave of core system replacements. That's what I'm hoping for anyway.
No, I completely agree. I think it's the foundation, right? You can build anything you want once you have a strong foundation. So it's a very good point, Alan. And Sophie, would you want to do the crystal ball gazing for us?
I'm watching, and I will continue to watch the financial data access schemes. There's going to be the bodies that will determine the standards. First, the data sets. So those who the data sets that going to have to be provided by the data holders, and of course, to provide access to the data, as mentioned by Alan, you need to clean. You need to clean and organize. So that's going to be the challenge. And the data sets, the exact data scope, and what's going to happen in terms of compensation, etc., going to be determined by financial data access schemes. There are still a lot of questions on how those bodies going to look like. Will they be national and not national? Will this be by type of industry or not? So there are still a lot of questions, and this is up to the industry to define it. There are already a few bodies that are positioning themselves as financial data access schemes. So this will be very interesting. And of course, this will determine how FIDA going to look like and whether it will work. So to me, this is one of the important points. And from all the discussions I have with the industry, this is one of the main points of attention they have, question mark that they have. So this is what I will look like. And I will look, of course, at all the rest, but this is one of, you asked me one thing, that is the thing.
Oh, so you actually, you had a lot of things packed into that, which is, you have to keep a watch. There are so many things, so many moving parts. And, but I think, it's important that, there has to be someone who's actually orchestrating all this, because, you cannot have, one piece of the puzzle going in a different way and the other piece going different way. So I think it's very important to make sure that, so, it's not like a watch in terms of watch how it develops, but more importantly, I think, keep a watch. Is that fair to say?
Yeah, exactly. Exactly.
Perfect. Hitesh?
So what to watch for? It's obviously the data security regulations and all good things that we have been watching for years in the financial institution. Now, the extent has increased. So I see FIDA as a double-edged sword as well. So that, it definitely enhances and opens up the door for innovation in financial services. But at the same time, it puts up a significant amount of scrutiny and risk as well. So the financial institutions who can master these, they are going to flourish. But, it's more like sugar-coated. So what I would be really watching out, even when the open banking come, the adoption was really, really slow in the consumers. And the challenge was because the consumer literacy or the financial literacy in the customer related to the regulations or related to the innovation, right? So what financial institution has got a greater responsibility, and the regulators as well, that while the regulation is coming out, it's going to get implemented, but at the same time, significant amount of education requires for the consumers, right? And so that they
Understood.
can at least make the best use of the regulations and the innovation in this space. Because often I've seen that's lacking. And I can end up with like, if while we were building up Infinite in the first place, we have done a significant amount of research on the consumers, and you shouldn't be surprised. I'm sure Alan and Anne wouldn't. 78% people in the UK, they don't know, or when they make a minimum payment on the credit cards, they incur higher interest rates. And that's a phenomenal number. Like, so think about like the people who owns a credit card, they are supposedly the literate people, the financially literate people. But if they can't make out the difference that when they are paying higher interest rates by making a minimum payment, think about the normal user, right? So the financial literacy or the education plays a significant role over here for the consumers.
Great. So, it's for you, it is the education, the financial literacy, which will help adoption. So that's what you want to look out for. Super fantastic. I think this has been a very interesting. I have one question, which I will actually not, expect any answers for. I'm going to ask this question nevertheless, so that this could be, something that we can cover in future webinars. And that question is given the whole point about data access between financial institutions. Who owns the data? Customer owns the data, and or everything that has been said. I think one of the most important things is the right to be forgotten. As a customer, do I have the right to be forgotten from the face of the earth? I don't know why anyone would want that, but I'm sure there are people who, if they believe I am the owner of the data, of my data, I should have the right, even if I don't and actually go ahead and access that right, but I should have the right to be forgotten. So on that note, as I said, I don't want to, I don't want an answer right now, but more like a food for thought for upcoming webinars. So, hopefully the regulators here are hearing, and Sophie, I'm looking at you. Uh, and, right to be forgotten should be, I know it's being built into regulation. So we look forward to hearing more about that in future webinars. Perfect. Thank you so much. I would thank you, and Sophie, Alan, Ritesh, thank you so much for being so gracious with your inputs, not holding back. And for future webinars, and I'm going to come directly to you asking for the gyan, if I can use that word, for all the inputs in the future. Thank you so much for your time.